Welcome back, everybody. We are diving deep today into ARM Holdings PLC.
ARM Holdings.
Yeah, and we've got a really detailed research report on them here.
Yeah.
So, we're really going to try to unpack what makes this company tick and go beyond just the smartphone connection that most people know them for.
Yeah, absolutely. I think, a lot of people, when they think about ARM, they just think of smartphones, but their influence is much, much broader. And really, to kind of start with a baseline here, they aren't your typical chip manufacturer. I think that's one of the things that makes them such an interesting company is that they've carved out a really unique space for themselves in the semiconductor market.
So you're saying they don't actually make the chips?
Exactly. They design the core technology behind the chips. So, if you think about it like an architect.
Yeah.
An architect designs the blueprint for a building.
Right.
ARM designs the blueprint or the architectural plan for the chips themselves, and then they license that technology out to other companies who actually manufacture the physical chips.
So they're the brains behind the operation, but not the brawn.
Exactly. That's a great way to put it.
Interesting.
And their designs are found in a staggering number of devices. We're talking billions of smartphone servers and even tiny embedded systems. These days, chips are going in everything from refrigerators to cars to, just all these everyday objects that we use. And so ARM's technology is kind of quietly powering a lot of the world around us.
Yeah, I remember when we were prepping for this, I was looking at some of the projections and I was like, wow, that's a scale that I had not quite grasped. But, it's interesting and all. But at the end of the day, it's a business. So let's get down to, the brass tacks here.
Yeah.
How does all of this translate into revenue for ARM?
So their revenue model is actually quite fascinating, and it's kind of a two-pronged approach. So they have two main revenue streams.
Okay.
The first one is upfront licensing fees.
Okay.
So when a company wants to use ARM's design, they pay a fee to license that technology.
Got it.
And then the second stream is ongoing royalties for every chip that's shipped using that ARM design.
So it's a combo of like immediate payment plus a continuous stream tied to the success of the chips themselves.
Exactly. And that second piece, the ongoing royalties, those are significant.
Oh, yeah.
In 2022, those royalties represented 57% of ARM's total revenue, and projections indicate that that could grow even more in the coming years.
That's a compelling figure when you look at the potential future for these chips and their importance in all these different devices.
Yeah.
I did also want to touch on the types of licenses that they offer, because I know in my research it seemed like there were different flavors, so to speak.
Yeah, absolutely.
Can you shed a little light on that?
So ARM offers three main types of licenses.
Okay.
You have the POP license, the processor license, and then the architecture license.
Okay.
The architecture license is especially interesting because it gives companies the most freedom to customize the design.
Oh, so that's interesting.
It's essential for companies that are really pushing the boundaries in cutting-edge applications like AI or high-performance computing. They need that flexibility to kind of tweak and optimize the design for their specific needs.
So they're catering to the whole, spectrum of needs, from the companies that just need to implement something basic to those that really need a lot of specialization.
Exactly.
That's pretty cool. Okay, so we've talked about, what they do and how they make money, but let's broaden our lens a bit and consider, the landscape that they operate in. So when we talk about semiconductors, what's the state of that industry these days?
So it's an incredibly dynamic space.
Okay.
The demand for computing power just keeps surging, fueled by everything from smartphones and artificial intelligence to cloud computing and the Internet of Things. But it's also a fiercely competitive industry. You have major players like Intel, Synopsys, and Cadence all vying for market share and trying to develop the most advanced technologies.
And, there's one more player that we do have to address, and that's the elephant in the room. The open source competitor, RISC-V. How much of a challenge does this pose to ARM?
RISC-V definitely adds another layer of complexity to the story. Its open source nature and the fact that it has a burgeoning ecosystem around it is attracting companies who are seeking more flexibility and potentially lower costs. So it's a development that's worth keeping a close eye on.
So how is ARM navigating this pretty competitive landscape? Because, despite those challenges, they still seem to be holding their own quite well.
They do, and I think a big part of that is that they've built a really strong moat around their business. When we talk about moats in business, we're talking about competitive advantages.
That's got it.
Things that make it difficult for others to compete with them.
Okay, I'm intrigued. What are some of the key elements of this moat?
Well, first and foremost, their architecture has really become the industry standard for mobile devices.
Right.
The vast majority of smartphones and tablets out there are running on ARM-based chips.
Yeah.
And this creates a powerful network effect. As more devices use their designs, developers are incentivized to optimize their software for ARM, which in turn makes it even more attractive to manufacturers who are building those devices. It's a cycle that reinforces their dominance.
So it sounds like they've got a pretty strong foothold established.
Yeah.
What else contributes to their strength?
Another key factor is the energy efficiency of their designs.
Okay.
This is a huge selling point in a world that's increasingly reliant on battery-powered devices.
Right.
Everyone wants their phone or laptop to last longer between charges, and ARM delivers on that front.
And then, in addition to the technology itself, their business model plays a role, I would imagine,
Absolutely.
in their resilience.
They've cultivated this massive ecosystem of partners,
Okay.
including semiconductor companies, device manufacturers, software developers, and they're all collaborating and fueling innovation within that ecosystem.
So it's not just their technology, but the entire network that they built around it.
Right.
It's fascinating.
Yeah.
And speaking of staying ahead of the curve, how committed is ARM to investing in R&D and sort of, making sure that they maintain that technological edge?
So they're very serious about research and development.
Oh.
They continually invest significant resources in R&D, and this is a really strong signal of their commitment to long-term growth and innovation. They know that in this industry, if you're not innovating, you're falling behind.
Yeah, that makes sense. Okay, so we've got this picture starting to emerge of a company with a solid foundation, strategic foresight, and a real drive to stay ahead of the game. But let's zoom in now on the people at the helm. Tell me a little bit about the leadership that's guiding ARM through all of this.
Okay, so we've got this image of, a company with real technological dominance, a really smart business model, and a real commitment to innovation.
Yeah.
But let's zoom in on some, specific recent developments with ARM. So, their IPO was back in September of 2023. How did that impact the company?
Well, the IPO certainly brought about some notable changes. One impact was on their operating costs.
Okay.
As part of going public, they introduced a new share-based compensation scheme for employees, and that actually increased their expenses a bit.
So, going public has its own set of financial considerations that you have to take on board. Did it impact their profitability at all?
It did to some extent. It's definitely a factor to keep in mind, when you're evaluating their recent performance and kind of projecting their future earnings.
That's a good reminder. Speaking of financials, we were talking about their revenue mix a little bit earlier. It seems like there's a shift happening there.
You're right.
Yeah.
We're seeing this trend toward more revenue coming from licensing, and that's particularly driven by these long-term agreements that they're securing with major semiconductor and systems companies.
What's driving this shift? Is it a strategic decision on ARM's part, or is it more of a response to market forces?
It seems like a bit of both.
Okay.
ARM is actively pursuing these long-term agreements because they see it as a way to secure these kind of stable revenue streams.
But at the same time, the increasing complexity of chip designs and the desire for customization among their clients is also contributing to this trend.
That's interesting.
Yeah.
So what are the implications of this shift, particularly, when we talk about their profitability?
Well, licensing revenue typically carries higher profit margins compared to royalty revenue.
Okay.
So in the short term, this shift could actually boost their profitability.
Okay.
But it also kind of raises questions about their long-term growth trajectory.
So it's like a trade-off. Higher margins now, but maybe less predictable growth in the future if they become overly reliant on these big licensing deals.
Exactly. It's a balancing act that they'll need to manage carefully.
Right. Now, I want to go back to the competitive landscape here because we can't keep dancing around that elephant in the room.
Yeah.
That open source competitor, RISC-V. It's come up a few times, but I want to really understand the nature of that threat.
Yeah, absolutely. So RISC-V being open source means that companies can basically use and modify that basic architecture without paying any licensing fees, which is a major draw for smaller companies or those that are working on these really specialized applications that maybe don't need the full range of ARM's offerings.
So for some players, it's a real, cost-effective alternative. But what about the performance? Can RISC-V really compete with ARM in terms of how powerful those chips are?
That's the million-dollar question.
Right.
RISC-V is still relatively young.
Okay.
And that ecosystem around it is still developing. So while it has a lot of promise, it hasn't yet reached the same level of maturity and performance as ARM's technology, especially in areas like mobile devices where power efficiency is so crucial.
So it's not a, immediate threat to their core business, but more of a long-term challenger that they need to keep an eye on.
Precisely, ARM can't afford to get complacent.
Right.
They need to continue to innovate and really demonstrate that value proposition of their technology, particularly in those areas where they have that really strong foothold.
Right. Speaking of value proposition,
Yeah.
we can't ignore the conversation around their valuation.
Yeah.
There's been some chatter about, their stock trading at a premium compared to the industry average.
Yeah, that's definitely a point of consideration.
And with premiums come expectations.
Right.
There's less room for error.
Yeah.
If their growth falters or they stumble in navigating these competitive challenges, that stock could be vulnerable to a correction.
That's a very valid concern. I mean, investors are betting on ARM's continued success.
Right.
And any signs of weakness could really impact their confidence.
So there's an element of risk that's kind of baked into their current valuation.
Yeah.
But on the flip side of that, what about the potential rewards? What are some of the major growth drivers that you're looking at when you think about ARM's future?
Well, there are two key areas that I think hold immense potential for them,
Okay.
and that's AI and the Chinese market.
Okay, let's unpack those. Starting with AI, it's clearly, one of the most transformative technologies on the horizon. How is ARM positioning itself to capitalize on that trend?
Well, AI applications require just enormous processing power.
Right.
And this plays directly into ARM's strengths.
Okay.
Their designs are known for their efficiency and performance, which makes them very well suited for the demands of those AI workloads.
So they're not just, riding the AI wave, they're kind of providing the engine.
Yeah.
That's cool. What about China? It's obviously a massive market,
Yeah.
but it also presents some unique challenges.
It does. China is a very complex landscape.
Okay.
On the one hand, they are heavily investing in building their own domestic semiconductor industry.
Right.
Their goal is to reduce their reliance on Western companies, which creates this significant opportunity for ARM to license its technology to those Chinese firms.
So they could potentially gain a foothold in this market that has huge growth potential.
Mm.
But what are the risks associated with operating in that type of environment?
Well, geopolitical tensions between the U.S. and China are a constant factor.
Right.
There's always the potential for trade restrictions, sanctions, or regulatory changes that could really disrupt ARM's business in China.
So navigating that market requires a real, delicate balance.
Absolutely.
Seizing those opportunities while mitigating the risks.
It's a tightrope walk for sure.
Adds another layer of complexity to their story.
It does, and it really highlights the importance of their subsidiary governance policy.
You're right. We haven't talked about that yet.
Yeah.
What is that policy and why is it relevant in this context?
Essentially, it's a framework that outlines how ARM oversees its subsidiaries, including those that operate in regions like China.
Okay.
It's there to ensure compliance with all those local regulations, and it helps mitigate potential risks associated with, working in these different legal and political environments.
So it's like a safeguard against some of those geopolitical uncertainties that we were just discussing.
Exactly. It's a sign of good corporate governance, and it demonstrates their commitment to managing those global operations responsibly.
It's good to know they've got that in place.
Yeah.
Well, we've talked a lot about, their business model and their competitive landscape and even touched on those geopolitical factors. But to really get a complete picture of their future, I think we need to look at their financial health. Yeah, we've talked about, their innovative business model and their dominant market position and all the challenges and opportunities they face. But to really get a clear picture of, what the future holds for ARM, I think we need to, crack open the books and look at those financials.
Absolutely. A company can have the greatest technology and the best strategy in the world, but if the financials aren't solid, it's all for naught.
Right. So let's dive into those numbers. What's the health checkup looking like for ARM?
Well, they've had some impressive recent growth. Their revenue reached $3.23 billion in 2024.
Wow.
A jump of 20.68%. That's certainly a positive sign.
Yeah, that's a healthy increase. What about their profitability? Are they actually translating that revenue growth into profits?
They are. Their profit margins are quite healthy, with a profitability score of 58 out of 100.
Now, I've seen that profitability score, mentioned in a few different reports, but I'll admit I'm not entirely sure what that means. Can you break that down for me?
Sure, yeah. So it's a metric that basically assesses a company's profitability based on several factors, including their gross margin, operating margin, and net profit margin. So
Mhm.
a score of 58 indicates they're doing well and converting their revenue into actual profit.
Yeah,
It's a sign of, good efficiency and competitive strength.
that makes sense.
Yeah.
So strong revenue growth, healthy profit margins, sounding like they're in a pretty good position. What else should we be looking at when we're trying to assess their financial health?
Well, their balance sheet is also quite solid. They have a healthy cash position of $2.925 billion as of March 31st, 2024,
Okay.
and manageable debt. This gives them, the financial flexibility to invest in growth opportunities or to weather any potential storms that might come their way.
That's good to hear. But you mentioned earlier that while they have shown consistent earnings, their historical growth rate has actually lagged behind the industry average. Does that raise any concerns?
It's definitely something to consider. Their historical growth rate of negative 15.4% falls short of the industry average of 20.2%.
Mm.
So it does raise the question of whether they can accelerate their growth moving forward.
Right. So it's a point of uncertainty.
Yeah.
But are there any indicators that might give us some insight into their future growth potential?
Well, there are some positive signs. Their recent growth has actually significantly outpaced their 5-year average, and analyst projections are quite optimistic.
Okay.
They're forecasting earnings growth of 31.1% and revenue growth of 18.1% per year.
And what about management's own outlook? What are they projecting for the coming years?
Well, management has guided for revenue growth of roughly 20% in both 2026 and 2027. So this suggests that they're confident in their ability to maintain a strong growth trajectory.
Okay, so, we've got this mix of historical data analysts, forecasts, management's own projections. It kind of paints a cautiously optimistic picture. But, as with any investment, there's always an element of risk.
Absolutely. And with ARM, I think one of the biggest questions really revolves around their valuation. We talked about how their stock is trading at a premium compared to the industry average.
Right. So how do we reconcile those two things? There's strong performance, but also that potential risk associated with their, high valuation.
Yeah, that's where things get interesting. It requires careful consideration of their growth prospects, their competitive position, and the broader market dynamics.
Right. It's a complex equation with a lot of moving parts.
It is.
Well, we've covered a lot of ground in this deep dive into ARM Holdings.
We have. We've explored their unique business model, their dominant market position, their financial performance, and all the challenges and opportunities that lie ahead.
But as always, the ultimate question is, what does this all mean for you, the listener?
Given everything we've discussed, is ARM a company you would consider investing in?
It's a decision that requires, careful consideration and research, and ultimately comes down to your own investment goals, your risk tolerance, and your assessment of ARM's future.
We've provided you with the information and the insights, but that final call is yours.
And even if you choose not to invest in ARM, we hope this deep dive has given you a better understanding of this fascinating company and this, complex world of semiconductors.
Because knowledge is power, and in the world of investing, the more you know, the better equipped you are to make those informed decisions.
So keep learning, keep exploring, and as always, keep diving deep.